Hey everybody, it's Justin Udy, team leader of Justin Udy and Team Real Estate. Hey, I wanted to go live today and tell you everything about our market, what we're looking at, and the changes and the information that you should know about today's real estate market. Now we're kind of getting in because we are live, and so I just want you to think about a couple different things about the real estate market. It has been so robust, and we've had such a change that a lot of people have been calling in. They've emailed us, they've texted me, and they've asked these same questions. So I want to give you this mid-year market update report so you know exactly what's going on with the market, how to navigate in the future, so that you know how to prepare, whether you're a homeowner, a buyer, a seller, an investor, or you're just a homeowner looking forward, deciding what should I do next. So a couple things that I just want to review with you of changes, adjustments, things that you should know about today's market that either maybe your personal real estate person that you work with you're not aware of, or the information you're getting from third parties is different. So in the market, being in selling not only multiple residential, buying, selling, rental properties, I really want to give you a good feel for what we're seeing and the difference and the dynamic adjustment within just kind of the last 6 months. So a couple things I just want you to think about. So number one is that the median price, and there was a great article that came out in the Salt Lake Tribune, and it talked about the median price has gone up 31% from the beginning of the year. Now, there was another article that I read where it said we went from 400,000 to 468,000 as a median price on the market. Now that article had cut off roughly, I believe, in about May. Now we're closing kind of towards the end of June, end of April. We have had a price jump, and I want you to think about these 5 things, and so just follow me as we go through these 5 things. With the affordability, we had a number of people in our market where interest rates came down in the market, and so it created a massive opportunity for them to purchase. What then happened is the prices began to increase. And so as the prices began to increase, the rate stayed the same. The problem is as the values change, terms are as valuable as price. And so as the terms of the market, meaning the price went up, but the interest rates were kind of going up and down, it created this gap. Now that gap in pricing made it so that buyers, it became unaffordable. And so a certain amount of buyers went away. So the difference between right now, from the 6 months ago, and the massive increase to over the last 3 weeks to the month, is it doesn't mean the market is negative. It means the market has changed because the gap in the terms of the market have become so great that certain buyers can't compete or they couldn't afford it. So that goes to number 2 item. I want you to think about pricing. Pricing is so important. So we had a property we put on the market at $425, very aggressive pricing, and guess what? Had showings, had interest, but nobody made an offer. But once we adjusted that price to $400,000, it created multiple offers, 4 offers, and took the price up to $420. So just knowing that pricing, had it began at $400 and attracted more buyers, we likely wouldn't have wasted that maybe 10 to 14 days on market. So when you're pricing, we have to be super strategic in how we're pricing our properties so that it attracts the most people. Number 3, let's talk about condition and quality. We need to make sure that property and the condition and quality is in supreme condition. If it's not, we need to make the adjustments in the pricing. What we're finding in today's market is the following. Buyers are willing to pay more money. As in the past, 64% of buyers will pay more money for a move-in ready property. So just so you know, one of the things that is very interesting is that when the condition and quality is higher and better than normal, we're seeing buyers willing to pay more per the low interest rates. Because typically in this market, since prices have gone so high, they've saved the money to put the down payment, because those are the people who are competing. If you don't have the money and you can't do non-refundable money, they're not competing in today's market. These are prepared buyers. The challenge is if it needs work on top of that, they're not really liking, because they're like, man, if I can buy a property for $500,000 that needs work versus a property that's $575 and it's 100% updated, they're going to take that extra payment because they don't have the 30, 40, 50,000 to make those improvements necessary. So condition and quality, let's make sure those are perfect and they make sense. Next, timing. The reason timing is so important is time will kill all value. So if on the timing of the market, what we learned with having multiple homes on the market, if we didn't make an adjustment quickly and listen to what the market was saying, it diminishes value. But if you make a pivot very quickly, it allows you to maximize values, bring the best buyers, and still attract them. Finally, let's talk about terms. We are seeing the following when people are being very aggressive. They're offering 30 days lease back, so the people get to stay in that property for an extra 30 days. They're offering non-refundable earnest money up front to be able to secure that property because this is the property they want. Repairs. They're not asking for repairs. If they are, they're very minimal. The other thing we're thinking about is the closing dates or the closing times. They've really compacted those dates to make it so they know that we're serious and they're going to get closed. They're making offers where the prices, again, when a market has gone up from 400 and 468,000 in 4 months or up 31%, it's very hard for an appraiser when the market's here and they're appraising past sales and the price is now here. So they're offering above whatever that appraised value is to make up for it. So when we're thinking about what are the next steps and what do we do, I want you to think about the following. Number one, save your money. You save your money because I think it's a smart thing to do. I think that we should always save our money so that one, for a rainy day, and two, for opportunity, and three, if we do want to move, consider that the fact is 80% of our buyers typically would sell their home and then get into the next one. But now you have a contingency upon that home sale. And so if you're a seller and it's subject to the sale of that home, it's almost like baggage. It's sometimes hard for them to overcome. So I want you to think about the following. Consider the fact that when you're selling your property, consider you have money saved and we're actually purchasing the property. And then this home, we're gonna make sure we get on the market and sell immediately. But we don't have the baggage. We have the time to look. We have the ability to shop the market. We're not under the gun to purchase something within 30 days. So consider that. Number two item that I want you to just think about, let's be frugal. We have so much more equity growth that has happened. I've seen more boats, more cars, more cigar smoking, more sushi eating than I've ever seen. Let's make sure we're being frugal and making sure that we're making the decisions that is a long-term decisions, maybe short-term, because I think our market's going to continue strong, but I want us to be prepared for the opportunities that are going to come your way, whether it be through real estate, stocks, bonds, different investments, so that that money that you've saved or the money that equity has been created, it's being compounded for you as opposed to maybe diminished. And my final thought, to be successful in today's market, one is obviously save money, two is to make sure we're being frugal, is three, be prepared for opportunity. I think sometimes that if we're not looking for opportunity, we're not seeing it coming our way. So sometimes with our house, we can make the improvements necessary to maximize the value. If we don't have a home, we need to say, now is the time. Like if we've always said in all of our videos, like, look, now's the time, the best time to buy a home was yesterday. Don't wait to buy real estate and wait. If you don't have a home, you need to get into something. If you're not prepared and you haven't saved money, we need to start saving money. If you don't have a rental property, now's the time to really start considering it, because the terms of the market are going to change. The interest rates are going to adjust. And if prices do adjust, they're going to be so minimal that you won't be able to catch the market. So my message to you is, let's be smart, let's be frugal, let's be savers. That's how I've lived in my life. My units are being the rental properties, my single family home where I live have been amazing for me and my family. And so I'm just hoping that in looking at today's market, very strong, will continue to grow. People from the outside are seeing the things that we're maybe not seeing. I do think that it's going to slow down as more buyers go away. Not slow down in the way that it's negative, it's just not going to have such a steepness, whereas it'll have continued growth, but a little bit more moderate. But if you have questions about the market, what to do next, next steps, please reach out to me, reach out to the team, reach out to us. We're here to help you. And good luck to you. If you need anything in the future, reach out. Again, it's Justin Udy. You can go to justinudy.com also to reach out to us, and we will talk to you soon. Thank you.